Hey, this is Justin with DayTradeTheMarkets.com, and in this video I want to talk about three very common and really killer mistakes that just about all of us have made as traders, and you may still be making. So I wanted to talk about those, identify those, talk about how you can overcome them as well. Before we get into the details, though, I think it's important to really understand the background or the path that most of us take as traders, and it's because of this path that almost all of us take that these mistakes are nearly inevitable. So the first step really is what I call the siren song of easy money and the perfect lifestyle. I mean, you have seen it. And frankly, it's understandable. There are plenty of unscrupulous people who are willing to kind of sell you that dream. But trading is touted as easy money, sit back, work 15 minutes a day, and I guess it attracts a lot of us, and you can make really, really good money in this business. Obviously, it's just not as easy as a lot of us are told, and many of us have found that out. So what ends up typically happening is that most of us get into the business and are seduced by this idea. Most of us are going to lose most of our money, and probably 80% of us then quit and don't come back. However, if you're watching this, you've probably been through that. You've probably lost, an account or struggle with an account, but for whatever reason, you got intrigued, and it kind of, got you to redouble your efforts and rededicate yourself. And so, what typically then happens, this is step two, and I've certainly gone on this quest many a time in my early years, is that you kind of go on a holy grail quest for the perfect setup, the perfect indicator. There, you figure there's just got to be the right answer. If I can just get the right combination of indicators and have 16 different rules, then I'll have this thing whipped. And a lot of people, and this was me, I kind of spent about many years back testing, trying things, taking it to the market, losing my money in a few days, or going back to the drawing board and starting over. Other people kind of go down a different road where they, I've talked to many people that have literally spent thousands and thousands and $1,000s on indicators, education, and that sort of a thing. It's a very, very common story, much more common than you might imagine. So if that's you, believe me, you're not alone on that. I went through that as well in my early years. But again, what typically happens? Well, same thing typically happens. You probably are going to lose because there is no holy grail. There's no perfect indicator, perfect setup, and it just plain doesn't exist. But if you are here and you're wise enough, you've probably come to that realization as well. But you realize there must be a better way. And really, that was one of the key turning points for me as well, as I realized there's no holy grail, but yet there are people making money in this business, really good money. There's got to be a better way. I know that I can figure this out, and again, that was a very big turning point for me. But the problem is that this path of being kind of seduced by the easy money of trading and then going on the holy grail quest, which I think most of us have done. If not, then I commend you for not falling into that trap. But what it does is it unknowingly teaches and reinforces the wrong habits, and it really it's this path that leads directly to the following mistakes. The first mistake is that you become too entry setup focused, and again, that's very, very common and very understanding. But what that means is that most of us go through this idea where we figure if we can just come up with the right rules, if rule X occurs and then my oscillator Y does this and I'm oversold or overbought on that, and the order flow says this, and I have the filter that says that. If I put all these rules together, then I've got it, and all I have to do is be disciplined and take my trade. And I went through this again for years. I got so frustrated because sometimes it would work, sometimes it didn't work. I couldn't really understand it. And I want to be clear, don't get me wrong, entry setups are very important, and we'll talk about that as well in other videos. But what the key point here is that most of us are putting entry in the wrong order. So it's not that entry is not important, it's that we're missing a step. Most of us are missing a step. And so the idea here, and again, this was also just a huge turning point for me, is when I was taught this from my mentor, is that different market conditions require different strategies. If you look at these two images, I mean, the image on the left there is a smooth desert road, and it's pretty darn clear that if you're driving, or pretty intuitive that if you're driving, you can go pretty much as fast as you want and be relatively safe. Very different story on a windy, icy, curvy mountain road. If you drive 70 miles an hour on that road, you're going to go flying off of the road. And intuitively, we understand that doing it in driving can be deadly. It's just as deadly, metaphorically speaking, in your trading account as well. And so what happens is that most of us are just focused on looking at our rules and finding our entry setup, and we fail to realize that the market's always in different conditions on every time frame, whether you realize it or not. We're either in a balanced condition or horizontal condition, or we're in more of a breakout type of a condition where the market's breaking from a consolidation into a more of a vertical or trend type of a situation. And what ends up happening is that if you know have a setup that happens to be more of a go with or momentum based setup, and you happen to catch it when the market's in a vertical phase, you're going to do great. You're going to make a ton of money. That's one of those cases where if you just take your trades and the market happens to be in this condition, you're great. But if you take a go with or breakout or momentum or trend type of a trade when the market's in a horizontal condition, you're in big trouble. Same thing goes in the opposite direction here, where if you have more of a fade or reversal or counter trend type of a trade, and you happen to take that when the market's in a horizontal or consolidating condition, when the market's in balance, you're going to do great. But if you try to go against that, you're going to get your head ripped off. And it's the same thing in trading. And so what ends up happening is that especially when we start, most unsuccessful traders, again, we go through this path where the trade setup appeared, all my rules are in place, I've got to take my setup, that's what I'm taught, I've got to be a disciplined trader, so-called, and we take it, and if the market happens to be in alignment, we're great. What ends up happening is what happened to this guy here in this image. It's not going to work. It just doesn't work that way, unfortunately. But successful traders, people that have figured this out, they don't think about entry first. They think about market context first. And then, and only then, they think about entry. So in other words, we want to learn to make sense of the market's context. Are we in a horizontal condition? Are we in a vertical condition? Are buyers in more control? Are sellers in more control? Is this a probable turning point? Is this a probable break point? And if we can understand the market context first, understand the market story, then we apply a trade that makes sense relative to that market context, okay? That leads to success, peace of mind, and the ability to trade consistently well, because the market conditions change day to day. And if you're not aware of what the conditions are, and if you can't see that, you're going to be in big trouble. You can't just be entry setup focused, or at least entry focused first. So the solution, again, context first. If the story of the market, the story of the day matches the type of trade you're thinking about taking, great. If not, you don't take that trade, or you go for a different type of a trade that fits the market conditions. I can't state how important it is. It's not so entry setups are important, but if you're looking at entry setups first, you're in trouble. You have to read the market first, then apply an entry setup. I really hope that makes sense. Now, the great news is that this is a very learnable skill. I was taught this skill. I can teach you this skill, and I'll tell you more about that as we continue on. So it's not like this is something that you're innately born with. This is a very, very learnable skill. Now, the second mistake that a lot of traders make, and again, it goes back to the path we take. We're seduced by the idea of money. So how do we keep track? We keep a scorecard of how are we making money, or are we losing money? And that's what we get locked into. Unfortunately, if you think about making money as a trader, you're almost certain to lose it. I know it's counterintuitive, but if you're focused on your results, you're almost guaranteed to lose money. If instead you're focused on making the best possible decision at any given time based on the information you have, the results tend to take care of themselves. What we like to talk about a lot is that successful traders are really just professional decision makers. We can only do a few different things. We can buy, sell, stand aside, change our position size, stand pat, whatever the case may be. But if we can make the right decision time after time consistently, it doesn't mean we're going to win on every single trade or even on every single day. But over time, and certainly most days, if you can make good decisions, it's going to lead to good results. It's the decisions that lead to results, not a focus on results. So winning traders focus on their process. They focused on making the best decision possible, knowing that the money takes care of itself. Losing traders tend to focus on making money. And you can tell if you're focused on making money, do you know what you are for the day, up or down? Do you know how much you need to get back to break even or get ahead for the week? Or do you know that, you're so far ahead, so you better not take any more trades? Or, do you sweat every single tick? Do you beg the market when it's going against you? All of these things tell you that you're results focused. That's going to lead to losing. You have to be process focused. But and again, this is a very, very learnable skill, and this is something I can teach you, and we'll talk more about that as well. The challenge, again, and this leads to kind of mistake 3, is that the challenge is most of us don't understand just how thorough and full our trading plan needs to be. Most of us are just focused on, entry and exit and maybe a few other things, but there's so much more that goes into this. We have to, trading is holistic. It's not just about entry and exit. We have to understand ourselves. We have to understand how the market really works. We have to have the right tools. We have to have the right techniques. That's where the entry, exit, account management, so forth comes into play. We have to understand how to work within our emotions and we have to understand how to improve, and it all works together holistically. And so most of us just don't understand how thorough a true successful trading plan needs to be. So we can't really follow our process because we don't know that we're not following it. Again, another illustration. This is kind of a from American football here, but most of us, if we're looking at a football game, we look at the quarterback or maybe the wide receiver and so forth, and we kind of judge the quality of that. But that's equivalent in a trading metaphor. That's like focusing on the entry. Okay. However, if the left tackle or the center is not very good, it doesn't matter how good the quarterback is. The play is not going to work. Same thing. Doesn't matter how great your trade entry is if you don't have all of these other pieces in place. Everything in a successful trading plan works together. Okay. So what encompasses a successful trading plan? I'm going to talk about 12 different things here, and you can kind of mentally take notes in terms of, do you do this? Do you have a structured, step-by-step plan that takes into account all of this? And if not, I would highly recommend that you look into this, and certainly that's something I can teach as well and help you grow in that area. But first of all, we have to really redefine how we look at ourselves as traders and our jobs as traders. And again, we're not here to it's not so much about being an indicator reader or something like that. We have to really think about ourselves as decision makers, and I talked about that. We talk a lot about this in the course material and so forth. What is also challenging is that we have to really, and this is something I talk about a lot, literally retrain our brain for trading success. The way that we're built as humans, our natural decision-making process, our natural emotions, our natural wiring is really absolutely opposite of what we need to be a successful trader. We're not predisposed to be successful at trading, so we have to understand these issues and really retrain ourselves to think differently. If you just think like a normal person, it's not going to work in trading. So you have to really refocus your efforts and refocus refocus your decision-making process to be successful. You also, and I talked a bit about this earlier, you really have to understand how the market really works. Again, it's not just about looking at some moving average or something like that. It's really understanding behind the scenes why the market does what it does. Why is it likely to go up? Why is it likely to reverse? Why is it likely to go down? Why is it likely to, consolidate at certain points? Because again, like I mentioned earlier, different conditions absolutely require different strategies, and if you can't even understand the different conditions or don't even know what you're seeing, then you're at a severe disadvantage. Okay, then we have to be able to see the market very clearly. There are a lot of different indicators out there. The one that we use is a tool that we invented called a relative aggression bar. And what's great about these things is it tells you when and I'll do a separate video on relative aggression bars because there's so much to talk about here as well. But relative aggression bars are telling you basically under the surface what's happening. It's aggression that moves the market. If buyers, and these are telling you if buyers or sellers at any given moment are stronger than the other side. And it's also telling you the degree of that aggression. So are buyers in control right now? Okay, are they extreme or are they strong and so forth? And understanding how to use these bars is really going to give you a great roadmap to what the market's likely to do. I kind of equate it to these two images here. If you look at the image on the left, this is like a price chart, okay? We can look down on these cars on the road and see if they're going north or south, going fast, going slow, turning right or left. We can kind of see the price action. However, it would be great to be able to see what actually leads the car to do what it does, and that's the gas pedal. Is the gas pedal being pressed? Is it being slammed to the floor? Is it being gently are we gently accelerating? Same thing on the brake pedal. That's something we call deceleration. Same idea. Is the brake pedal being slammed, or is the brake pedal being kind of just tapped? And it's the same idea here. If we can see what's going on under the surface, we have a much better ability to see what's going to happen with the price action, because again, aggression leads price. So we're not just looking at price action. We're not looking at lagging technical indicators. We're truly trying to understand what's going on under the surface. And again, I'll talk more about aggression bars in a different video because they're very, very interesting and very helpful. Then when we have the ability to kind of see the market, we need to be able to put that in context. I do this in a way that I call box theory. You can essentially think of each day as a book, and then each of these boxes as a chapter of the book. So if you can understand each chapter of the book, you can put the whole thing together. It's like a piece of the puzzle. And so the boxes are really showing you what to look. And I'll have, again, another video more in depth about boxes, but I think you'll be blown away by how well they help you see the market. So that's, again, putting the market in context. That's got to be part of your plan. Then you have to have trade setups. This is what almost all of us do have, but you need high quality, high edge trade setups. Certainly, that's part of this plan as well. We've got a lot of different setups. I like to start with the first four, and then we can add some other more advanced ones as we go, but we'll talk more about trade setups in another video as well. And then you have to determine which trades. You can't just blindly take every trade that comes across your screen, right? You have to be able to identify the trade and put it in context, and then you have to determine, do you actually want to take the trade or do you want to pass on it? And the way that I do that, and what I teach, is an idea of scoring, where we kind of put it on a scale of 1 to 10, where we look at, and again, another video talks more specifically about scoring, but basically the higher the score, the better the trade, the higher the edge, the lower the risk relative to the quality of the opportunity. And really, you can break down trading that way. If you can understand what you're seeing, you can get a pretty good idea of the quality of the opportunity. Then you have to ask yourself, okay, what is the true amount of risk I would have to take advantage of this opportunity? If you know those two factors, then you can determine, is this amount of risk worth this opportunity? And that's basically what the scoring system will do. It's telling you, if you get a 10, for example, that's telling you that a trade is a very high opportunity trade with a very low risk. If you get an 8 or a 9, it's telling you it's either a great opportunity with a little bit more risk, or it's a really, really good opportunity with a very small risk, okay? Anything 7, 8, 9, 10 is probably worth taking, or strongly considering at least, okay? If we score a trade that's more like a 5 or 6, there are times where we might consider taking that with other factors that we'll talk about. A 1, 2, 3, or 4, it doesn't mean they can't work. It's just that if the rest of your life took 1, 2, 3s, and 4s, you're going to lose. The rest of your life, you take 7, 8s, 9s, and 10s, you're going to win. I mean, it's basically the bottom line. It's not that this is some holy grail. It's that it's giving you a framework for understanding this idea of risk versus opportunity and what you're seeing in the market. Okay, so after that, then you have to have a plan for managing your trades. And I think a lot of people overlook exit. They don't think of it as important as entry. I would argue that it's as important or more important than entry, okay? The ability to minimize the dollar loss you have on your losing trades and maximize the dollar gain you have on your winning trades is really what's going to separate the good trader from the great. It's going to separate the break-even trader from the good. It's amazingly important. You have to have a method for doing that. Also, you have to have a method or a strategy for managing your account more effectively. In other words, how much risk are you going to take on a given trade? What are you going to do if you get a great opportunity? Are you going to take a larger position size? Do you have situations where you might cut your position size down? How do you grow your account over time most effectively? How do you stem losses if you hit a little bit of a cold streak? And these are all got to be part of your plan. You also clearly have to understand how to manage your emotions. That doesn't mean being a robot and suppressing your emotions. It means understanding how to see in real time or feel in real time what you're going through mentally, and how to deal with that, how to work through your emotions, not suppress them. And ultimately, then you have to be able to put it all together in a very logical step-by-step plan. So you have to know what you're looking for. You have to know when you're going to get in, how aggressively you're going to get in. You have to know what you're going to do if it starts moving against you, what you're going to do if it's going for you. Do you have plans for all of this thing, how you're going to manage it? Everything's got to be part of this plan. So, and this is, again, what I teach and what I can help you with. So, putting it all together, you have to break it down step by step, but then you put it all together into a cohesive plan, and you've really got something that you can depend on over the long run. Also, those are the things, again, I just talked about 12 things I really believe you have to have, that every successful trader has to some degree, is a plan for working through all of those different issues. What I do recommend that you have as well, this was a huge turning point for me around 2007, 2008, after I had struggled for nearly a decade. I found a mentor that was a good fit for me, a good match, really turned everything around for me. It was the difference. I would not be here without that mentor. So you can do this alone. You absolutely can. I just think you shorten your learning curve and really make a lot more progress. And I just think having a coach, having a mentor, having a guide is just incredibly important. And certainly I would love to be that with you. We'll again talk about more of this in other videos, but really incredible price for what you get. We're going to get a lot of live education sessions, as well as just the step-by-step guide methodology that I talked about every step along the way. We're going to talk about how to put that together in a cohesive plan so that you're going to learn to make sense of the market. You're going to be able to see it clearly. You're going to be able to identify high edge trades. You're going to be able to score those trades. You're going to be able to determine how you want to manage those trades once you get in them. You're going to be able to determine how you want to deal with your emotions, how you want to deal with your account size, all of these different factors. Plus, you get access to our unique software, full support, basically everything offered you get, along with live coaching many times per week. So I would love to work with you. Please look for other details on the site, or just jump in and become a member. I think you'll be, obviously I'm biased, but I think you'll be blown away with what you'll receive. I would love to work with you if this was a good fit. Please join. Otherwise, ask questions, info@daytradethemarkets. By all means, I'll get back to you as quickly as possible, and look forward to speaking with you soon. Thanks so much.